What's going on, boys? We're gonna be going over some trade recaps. All right, so I just got home from the bar. It's not. We're just gonna be talking about a couple trade recaps. I just said that. We're just gonna be talking about a couple trade recaps for the third time on. What is today? Today's May 7th. So, DraftKings has been a short focus of mine within the ranges of this candle. Okay, and why is the overall perspective of just this candle very important? Well, because look at this candle. Okay, so whenever you're getting these, um, let's just say from the larger perspective of things, what's happening here, guys, is this is all a lot of sell side imbalance. Look at this trend; it's very expansive consolidation, expansion, right? Consolidation up here. What do we get off that previous consolidation? We get a major liquidation bar, a major candle with a ton of volume, relatively low volume in between, and then just a major knife and a fail of a previous support, and then lower highs subsequently, right? So lower high, lower high. What are we looking for here? Now I'm gonna put this into a little bit of like a systematic perspective of we had a we had an external high, meaning for the time being external, meaning we developed a lot of internal ranges between this high and this low, right? And then we got the expansion and then another major liquidation candle followed by subsequent lower highs, lower high, lower high, right? So whenever we're looking at these confines of our little range. I mean, you could take a little bit of like a trend line here, but I don't care about that because the larger perspective is just sell side imbalance, previous consolidation, false breakout over this high, and then lower highs to come. It's developing sell side structure, guys. So whenever we get this next secondary candle on super, super, super heavy volume, I'm looking to trade within the confines of this whole entire range short and preferably equilibrium. Okay, so let's just dive into the chart. Let's talk about, and what I mean by equilibrium, guys, is just the upper ranges of this candle. It doesn't necessarily have to mean that we're trading, oh my gosh, a lower high here or a lower high here, but it's more and less just about we got the breakout from this high. Breakout was failed, retested, lower high, and then consolidation at the close. So the larger intention, the larger picture behind this whole entire chart is short. Now, where are we gonna place that short at? Well, let's go into intraday price action now because this is where I executed. Okay, so we had the opening print all the way down here. The opening print was in the middle of nowhere. Sahara Desert opening print is like what I like to call it. We broke out, we got the retest of the previous day high. We hold it, and then we move our way higher. We're moving our way higher all the way into where the larger intention, where the larger perspective from the chart is. It's all distribution, right? So this whole daily range is where it would be respected as terms of a lower high. This isn't necessarily lower high because when you go to the daily perspective, where are the lower highs coming from? Lower high, lower high, lower high. Is this necessarily a lower high? No, it's just a opening print failure and then a slippage beneath the previous internal high, and then we kind of consolidated on lower volume with an inside bar this day. So this is already right here. Whenever you consolidate from a top heavy chart, whenever you consolidate the next previous like day from your lower high potential off this earnings candle, and then you get lower high and then you get like a inside bar afterwards on really low volume, that doesn't necessarily mean that this high of day is going to be respected as a lower high. It just means that the larger perspective shows that, okay, we pushed our way up towards this high, meaning this high up here, and then we could potentially start seeing that failure, and then internally we could start finding that lower high. So whenever we go to the 5 minute, what do we have? Like I said, break, retest, lower volume, previous day high. We successfully hold it. We expand off of it. We're all just expanding to the upper confines of this liquidation candle. Whenever we're looking at this from like, okay, let's just take the orb high, for example. Established orb high, or you could take this one. This is the 15-minute orb high. We break it, we base it, we fail, and then we put in a lower high. Now, whenever I'm looking for this, I'm looking for a break of structure because this in intraday trading ranges. This is a higher low, this is a higher low, and then we fail right here. And keep in mind, this is all kind of tying in with confluence to the larger perspective. We fail it. Is there any crazy volume, especially off the opening pop? No, there's not. So whenever we fail this, what would I be looking to do? Go short. Or was I short? This opening candle, risking this. Where's the target? Pause the video. Can you tell me where the target is by pausing the video? Okay, well, the target is going to be, in my opinion, let's take our daily bar by bar higher lows trend line. Okay, we technically are trying to fail this spot, right? And we have an external support being built here that was followed by higher low, and then expansion, and then failure. Failure on heavy volume, heavy spread. That hints at distribution, followed by subsequently, what do we get? Lower high, lower high. We're looking for a lower high, but where's the target? Well, in my opinion, the target is a break of this trend, a failure of these lower highs, and then probably what we're going to do is push beneath this low, probably a little bit lower. I don't know, but we're all just trading short-term expiration. So does that necessarily matter with a larger perspective of where our target could be? No. It like we can't like find out where our target can be based off of this, but let's just dive into the chart, the intraday chart. This is a failure. Higher low, higher low, higher low failure. Where is this into? Previous day high. What happens off previous day highs? We sell on increased volume, and then we start giving it up, and then a seller gets aggressive beneath this lower, higher low, and then this previous day high, as well as this breakout failure spot. So that's where this is all being grabbed from, is this breakout failure spot. That's my new trailing whenever we claim this. So if my new trailing is whenever we claim this, and my entry is up here, could I really lose? No. I can only win. And then this just continuously sold off into the close, right? We never had any sign off the opening print. All we really did off the opening print was right here. We actually broke and based it, and then we sold off into the close. I scaled to, what was it? 2/3, I believe. Yeah, so I'm holding 1/3 overnight. But whenever you take swing low to swing high, current fibs, that's your equilibrium. What do we get in the close? Equilibrium, right? So whenever you're looking at this from like a structural standpoint of higher lows, let's go to the daily chart real quick one more time. This swipe the external low being right over here, right? And then is this a lot of volume down here? No. And then we started getting the relief back into the breakout failure spot, meaning this preliminary resistance, which is what I love to mark for now potentially a lower high. So anytime you have a chart and you're saying, oh my gosh, we're breaking out, and then say these are your resistances. We broke out, we failed, we're drawing down, and we're pushing back up. Say this push was low volume ever since the bottom, and then subsequently the trend higher was all low volume. I'm looking at the breakout failure spot, so this whole entire range. Same goes for all the way up here, right? Resistance, failed, broke out, and then failed again. Now it's looking to push its way back down. This is almost like a head and shoulders pattern, guys. So let's go back up. We had the 50 SMA. We failed beneath it. Really low volume, which is a little bit alarming. But you don't need a lot of volume. You don't need a lot of volume in ranges like this where the distribution kind of already happened. A lot of the selling from up here and then the correction into this sell side imbalance happened right over here. And then we got the lower high and then we failed with another lower high. We're looking for a third. Pretty simple, right? Okay, let's talk about the snow trade now. Snow trade is beautiful. So you guys remember what I talked about in terms of like establishing a support or just a range where it would make sense to scale into the strength, meaning whenever you're pushing up into like a resistance range on a chart that has a lot of seller dominance behind it, meaning a very large volume gap down, in showing the sell side intention, minus 18% right over here on the underlying for the day. And then you get a sell off afterwards. And then you get these shallow lower highs, meaning you're getting this major trend down, this huge imbalanced trend down. What it really resembles is a low volume pocket, meaning that it moved like butter through this range. So it's going to move like butter back through down here. And then lower high. And then we started getting this 3-bar or this like almost like a 3-bar pattern where you're getting this unfilled gap. It wasn't really ever tested. Here's the new gap open right here. And then we kind of dug beneath this candle low, but this is all an untested gap, right? So whenever you're ripping down into this spot and you're finding a buyer off of it, and then a lower low that's being bought, and then a third lower low at the bottom of the gap that's being bought, I'm looking for now potentially something that looks like this. So lower low bought, fill of gap down here, rip back higher. That's our third lower low bought. Now what I would be looking for at a fill of a gap would be higher lows, right? And all just to correct into a pivot that makes sense. So you get your heavy volume gap up right over here, highest volume bar from over here at the resistance over here to the new heavy volume gap up, which is 29 days, right? So it means a lot. We're looking for a higher low essentially off of this progression. You could pull swing low to swing high, look at the discount. If it doesn't reach discount, it's fine, but we got lower low bot, and then equal lows, and then an expansion higher. Where's the expansion higher likely going to be? Guys, it doesn't have to be perfect, but it's alongside focus into this breakdown level where this support was created, and then it never really got back above. This is where more liquidity is sitting within the name, right? You're getting heavier volume sells over here and then low volume in between those ranges. So whenever you're moving your way back higher for potential relief, especially off of a bull gap being filled on into here, it's going to relieve itself back into where the heavier amounts of shares were transacted, meaning heavier volume. So here, just this, the general confines of this range. So whenever we're looking at this from like the Friday kind of thing, this has been a resistance that's been established for a while, right? Resistance in pre-market, resistance in pre-market, resistance right off the open on Friday of last week. and then we push our ways down. Let's go to the regular trading hours to see the overnight gaps. We're pushing our way down. What we're doing is we're pushing our way back down into a spot where it was the previous overnight gap. And the breakout where we're looking for relief to draw our ways back higher into the heavier volume is going to be up here, right? Resistance, resistance, failure, just those general confines, right? Because we have a external high and then an internal high, internal high. We failed it, filled the overnight gap, and then we finally started finding that buyer into the Friday close. Same exact thing happened the next following week into Monday, which was yesterday, which is what I traded. And then I was looking at the break and base of like the ranges of like 160, 160, 50, right? So it held 160 cleanly the whole entire time, and it held the opening print, which is right here technically. Okay, so whenever you're moving your way higher, we're just looking for short-term trend back into where the draw would be at the higher volume ranges. Pretty simple. And the cloud names. This is a cloud name. Let's go look at cloud names. Oracle, very beautiful cloud name where it's major bullish power earnings gap, heavy volume, crazy resistance over here. Bleeds beneath it back into the bottom of the gap down here technically, and then it starts holding it. Guys, I'm just looking for relief over here, man. I'm not looking for any sort of daily reversal of the trend. And this is technically an uptrend because we're getting higher low, higher low, higher low, and then just a continuation higher earnings gap. It fills it, finds a buyer off of it. And yeah, I mean, that's just kind of how it works. This is also the 200 SMA. If you want to pull up your 50 and 200 SMA, it's kind of just basing on the previous bull gap, the bottom of the bull gap, as well as a 200 SMA. I'm looking to scale into snow, or it could have been this one with momentum just based off the cloud stocks. PANW, another very beautiful cloud stock where we got a major gap down and it pushed its way back higher. And then we've been kind of just basing within the earnings candle low and then the relief afterwards to the high. And we're just claiming kind of like this resistance over here that broke out, retested, held, 50 SMA, beautiful. And then you also have like this upper range of resistance. And then it was kind of just absorbing off that resistance the whole entire time. So whenever you push into a resistance, you could definitely experience a lot of turbulence. But yeah, I mean, this is just a very beautiful structural chart that's looking for relief back into like upper ranges of where we sold off from. So I mean, that's pretty much what my last two trades were that have been making the week go pretty well. If you guys have any questions though, let me know.